name is Brian Feinberg. I'm the founder of Athera Labs and Plato here in New York City. And just wanted to say hi to everybody out there. We're hosting really an unveiling event of 14 months of development of Plato and having a number of our partner companies present tonight. So hope to see you soon. If you need anything, we're at atheralabs.io.
Good evening, my name is Paulson Ambukin, and I'm with the City Blockchain Events Company. We do all kinds of blockchain events. We are in the business of educating the consumers on blockchain. We do private networking events, we do company showcase, we do private investor luncheons, and we also do the new thing which is called the Blockchain Golf Classic. If you're a golfer, you've got to come and play at our next event, which is on December 5th. 3rd or the 5th, we have not decided yet, in Miami at the International Links Golf Course and Country Club. It's going to be all about bringing investors and blockchain together, educating. We have some fire chat panels going on. We'd love for you to join us and learn about blockchain and take the fear out of the equation and hear from innovative companies that are going to showcase their products and services. Thank you.
As we all know, this industry has touched many, many different sectors. Tonight's agenda is going to be pretty simple. We're here to introduce our company. We're here to introduce Plato tonight, which is an application that we started working on 14 months ago, with also another objective agenda, and that was to drive awareness into this industry and put this innovation, this great innovation that we all touch, on display. So with that being said, just a couple, if anybody needs the restroom, it's in the back there. We have 2 fire exits, one here through the front door, and yeah, right in the back, David. I also want to thank a number of our partners here that came in from out of town today to be able to kind of show their companies in front, and we're really excited about the future of what this industry brings. We are giving away a Samsung Galaxy Tab 4 tonight, so if you deposited your card up in the front and you stay through to the end, you will be able to receive your Galaxy Tab, and I can guarantee you we're not using a blockchain on authentication, but you know, we are picking a fair winner. So with that being said, I would like to introduce a very, very close friend of mine that also kind of, when I started off, I kind of bumped into him. We started to share our Rolodexes a little bit, and we realized, A, that we were a compatible team in terms of being able to kind of drive not only this agenda, but the protection of companies and the protection of IP. So Joseph Daniels is the co-chair of McCarter English and the firm's venture capital and emerging growth company practice. He represents a multitude of both startups and publicly held companies and technology firms with a certain both affinity and specialty around the blockchain space. He regularly advises across a broad array of different topics in the space, including regulatory compliance, ICO listing, SaaS listing, and well now into the migration into the capital market space. And I want to welcome Joe to the table right now, and we'll listen to what Joe has to say about blockchain. You guys have a clicker? Yeah, 1 second.
Okay. So this is my ICO market update. It's mostly focused on the regulatory perspective and whatever I've gleaned from case studies and word on the street in various cities. I go out to California and Texas a lot to see what's going on next. Just a little bit about my firm. We're about 175 years old. We focus on the typical things big law firms focus on, whatever businesses need: corporate, intellectual property, litigation, tax, all the different departments. We have about 430 lawyers and 9 offices across North America next. I'm the co-chair of this venture capital and emerging companies group. We basically work on these 4 items here. That's 3 circles of activity: helping a company form, split up their equity, raise angel and venture capital financing these days in token sales and other blockchain-related deals. Acting as the outside general counsel of those companies and liaising with the other highly expensive lawyers inside of the big law firm to make sure their costs are contained, because we're experts at startups effectively. The second circle, helping them expand through acquisitions and partnerships and commercial agreements and revenue deals, whatever. And then thirdly, helping them exit through M&A and IPO. Usually for tech companies, life sciences, and consumer, and now blockchain companies. can't see the bottom of this thing. Can you shrink it? Oh, there you go. Yeah, so we represent like 1,250 startups and funds. We're in the pitch book. We're usually ranked in the top 3 to 4 regionally, 6 to 9 nationally, based on the number of angel and VC deals. That includes token deals. Actually, sorry, it doesn't include token deals yet. If it did, we'd probably have more. Be higher up in the rankings. We have a high deal to lawyer ratio, meaning our competition usually has 2 to 3 times as many lawyers as it is. We're very focused in the space. We represent a lot of more prolific VCs in New York and California, like FF Ventures in New York, and we did 185 deals for issuers and investors in 2017. We already did 2016 this year, 216 this year, and it's only been 9 months, so we're sort of killing it. We also have 120 lawyers in the IP group that do, they're experts in every technical area, from software to hardware to biotech. And they do patent and trademark and copyright, litigation, licensing, and prosecution. And 100 litigators ready to sue and defend all over the U.S. This is me. I'm going to go through this a little quickly because you already read my bio. So I've been doing this for 22 years, including 8 in California during the dot-com days. I'm from California. Here are some of the bigger companies I represent, like Monster Worldwide, JobSign, Autodesk, Atmel is a big semiconductor, Informatica is, Vitrogen is a biotech, and some of the bigger funds like Mayfield and Walden are really big value funds. Investment banks like Credit Suisse, Morgan Stanley, and underwriter side of IPOs. So I've been in financial services for quite some time. So when the ICO boom sort of hit, it was to us just another type of private placement or a capital markets deal. It was easy for us to represent the companies. We worked on numerous SAFT and token offerings, including QuantStamp in San Francisco, $30 million, Augmate. You're going to see a video from Augmate later today that raised $13 million. Dark Matter, also in New York, raised 33, Unibright 13, Iconic Labs, probably going on 10 at this point. And I have a big pipeline. Next. So what is an ICO? So, and here's some numbers. 300 million only from 2014 to 2016, and then 6 billion in 2017 alone. There was a bit of a rally in 2017, comparing to 72 billion invested in venture-backed companies in 2017. That's not all of venture. That's just venture money invested in companies that already received venture capital. Back in the day, during most of the first half of 2017 and for that whole 2014-16 period, ICOs were generally not compliant with federal securities laws, even though the tokens being sold were securities. Okay. And then all of a sudden, in the middle of 2017, the SEC started to pay attention because so much money was going into the market. So many people were losing so much money effectively. Next slide, please. Yeah, so let's look at 2017. So only about half were successful, but the average raise was 13 million. So many people piled on the bandwagon and tried to raise money for generally startup companies with just a business plan, just a white paper. But if you look at the biggest deals, the top 10 were 30% of the total. Only the top 2 deals actually tried to comply with U.S. federal securities laws. The others are probably under investigation. We'll get into that later. 2018 data, let's scroll down a little bit. So again, 2013 to first half 2017, volume was 6 billion. Then in January to June 2018, we had 537 ICOs with more than 14 billion raised, compared to 2017's 552 ICOs for the full year. And the average size doubled to 25 million. But then all of a sudden, you get this drop off down to a couple $100 million a month in July through September. All those deals that I listed that were successful, they sold their last SAFT or token in June in the United States. So I'm not sure what's going on. Maybe you guys do. Does anybody have a theory that's not listed here? Please let me know. Crypto crash, big time. In the summer, actually, starting in Q2. The SEC regulatory crackdown started in the last 12 months, basically the second half of 2017. And I think that investors having dumped a lot of cash, even if they're just crypto miners in Western China, even they have figured out, why should I invest in these utility tokens when it's just not clear when the platform is ever going to be built and when that token is going to increase in value. And they look at the charts of all the ICOs and they go up and then they go down and they just keep going down. So they stay down less than 10 cents. Next. And as for that regulatory crackdown, if you're not clear, it was in the second half of 2017 that the SEC took the position that virtually all tokens are securities. So saying basically all that full $6 billion that was raised, you all violated our laws. Then they shut down an ICO in progress in December of 2017, the Munchie deal, made them give all the money back. And in Q1, Q2, they sent 300 plus information requests to a lot of companies out there, all over North America and all over the world, really. And I'm familiar with these investigations, and I would bet that there's a lot of enforcement actions coming because that's what they like to do. And then in June of 2018, this is a big deal, the director of the Division of Corporate Finance released a statement sort of explaining that, look, there are some tokens that are not securities and they don't have to be regulated by U.S. securities laws like Bitcoin and Ether, and only those two. They didn't mention Ripple, they didn't mention EOS, I guess they call it. But most tokens that people want to sell and to raise money are securities. And they gave a comprehensive test, and they gave all kinds of factors that made it a security or not a security, and how, and they sort of described a pathway to get to becoming not a security. And that boiled down to basically two factors, where you have many users and service providers on an operational and mature platform. It's fully built out, it's operational, sort of runs on its own, and the people who are buying the tokens in an ICO or otherwise, in the secondary market, whatever, do not expect the price to go up because of the work that's being performed by the people who built the whole platform. In other words, the promoters that built it are not going to get rich off appreciation from people bidding it up because they're speculating in the one they use. So that's where we'll just get to the conclusion, which is probably the most important thing. So the bottom line is almost all ICOs sold in the U.S., in or from the U.S. You can be a U.S. company selling overseas. You still have to comply with U.S. securities laws. In the context when you're selling overseas, it's mostly the resale regulation about selling back in. And most people these days, they do a Reg E 506C offering, which is you blow it out, you make a general solicitation, but you only sell to accredited investors whose status is verified, either by you or the issuer or some other service. And a combined Regulation S offering, which means you sell it overseas and you restrict the ability for people overseas to sell it back in the United States. And some also do this Reg CF deal, regulation crowdfunding deal. They go through a regulated online portal like Seed Invest or Start Engine or, Seed Invest was acquired by Circle, which is Goldman Sachs. There's a lot of platforms, Republic, there's a lot of platforms. And they spend 15 to 25 grand when they prepare a document that's filed with the SEC, a disclosure document, and they can raise up to $1 million from retail, non-accredited investors. And then, of course, you can file an S1 or Reg A. A lot of people have talked about that, but there are about, I'd say, 10 filings that have been filed, but they have not been declared effective. So there's no clear pathway to registration of these deals, so that's why most people do the private offering. And next, I just wanted to speculate in case anybody wants to think about it, just go all the way down there. I mean, it seems to me that what people, does anybody have a utility token that actually does anything? You can actually allow you to use it. Yeah, it doesn't have a utility yet. So therefore, why would the investors buy it? Right? And also heard from brokers and platforms, like Republic and Seed Invest, these guys, why don't you incorporate traditional equity or debt features so the investors feel like they're getting something like what they're used to? Right? And then, like T0, they raised $130 million. The only thing they built into their token was the right to receive a discretionary dividend. Much like Apple common stock, you can get a dividend, but they don't have to declare it if they don't have the cash. Right? And a 1x liquidation profit. So just a bare minimum, and they were able to raise $130 million. Of course, there's a lot of other factors going on there, like it's owned by Overstock, and they knew that Overstock was going to support it. And then I see a lot of deals where people are trying to tokenize funds, when they're trying to raise money for a venture fund, private equity fund, hedge fund, real estate fund, asset-backed securities. Basically, people are trying to tokenize the entire securities business. That's all I've got.
Awesome. Your email?
It's okay, I'll give you my card. Yeah, scroll a little bit down so they can see my email.
Very good.
Yeah, sure.
So you're advising Ethera Labs?
I do.
Cool.
Good? Okay.
Thanks, Joe.
Thank you. Appreciate it.
So we're going to move quickly down the path of compliance right now, and as we talk about really what's happening in the regulatory world, there's something very important happening here too. And that is that technology is starting to really catch up with the regulatory world, and we feel that the dichotomy of both of those factors are going to drive more commercial adoption and more institutional, I would say, appetite towards these entities. Before we bring our next guest speaker in, I want to be able to introduce a company that Joe had mentioned prior. We've been working with Augmate now for 8 months. They're a leader in the IoT space. They've built a really incredible platform to manage, to do device management over very, very big networks. And when you start to apply a blockchain, as we know, there's a lot of congestion across the network area, the network environments, and we need to be able to not only protect that data, but really kind of drive utility to some of the large network providers. So we'll play a little video from them.
This is Julia. Julia wears a smart pacemaker. It monitors and manages her heartbeat 24/7. With unbelievable efficiency, it learns, optimizes, and sends critical data to her, her doctor, and a secure network of scientists around the world researching heart disease. Imagine someone they don't trust getting control of it or stealing it, her data, the analytics, even its ability to function. Now imagine a much larger pacemaker, the one at the heart of your business, the one connecting your employees, customers, data, and devices. It has turned every business from auto and home to pharma and farming into tech companies. Augmate is building the next generation of device management because everything made in the future will be smart. From the floors we walk on, to the clothes on our backs, to the hundreds of smart devices that will be in your home. So more is on the way. More connectivity, more sensors, more data, more insights. The opportunity to save more than 30% of operational costs in your production facility and deliver an edge over competitors through intelligence. Yet with more good comes more bad, more privacy concerns, more software and security updates, more outside threats. Our open architecture platform is being built for smarter device management, with tools and technology to help you harness, manage, and leverage the power of the future of the Internet of Things. We have integrated new technologies like blockchain and distributed ledger, centralized control for ease of use, decentralized data flow for scale and security, and we are allowing companies to plug the Augmate Connect platform into other systems with our APIs. Workers from around the world use wearable devices managed by Augmate, like smart glasses on factory floors, permission to execute individual tasks more efficiently. In logistics, Augmate is being used to enable new workers to achieve equal efficiency to those with years of experience. Remote workers are leveraging support staff from thousands of miles away with secure See What I See assistance, solving complicated problems in real time. Tomorrow, we will integrate all devices from coffee machines to industrial turbines, and yes, even pacemakers. While some see the future of IoT as chaos, we see opportunity. Let's make the more that's on the way more secure, more connected, more autonomous, more efficient, more profitable, more welcome.
So as you can see here, we have a lot going on with Augmate. The company has raised $13 million to date and has some notable investors like Tim Draper. Our role with the company is not only being able to help kind of guide investor direction towards the company and this raise, but it was really to create connectivity between some of our other partners. 2 months ago, we went to, we're working with PwC in India through their IP department, and we're already in discussions right now with PepsiCo and being able to deploy Augmate system around vending machines. And we want to be able to kind of drive that narrative across networks. And just as a matter of disclosure, this is not an offering to for securities. You know, everything should be looked at in a very, very careful light, and before any investment decisions are made, you should speak to your financial advisor. So with that being said, I want to kind of move the program forward and introduce Ben Kessler of Cabin Network. Cabin is leading the path for the normalization of AML and KYC across the crypto universe and beyond. Their solution combines the latest biometric enhanced verification for digital verification on the blockchain. Please everybody welcome Ben.
Thank you, everyone. So Anyways, I want to do a couple of things. I want to tell you a little bit about my background, tell you a little bit about Cabin, the industry, why we believe we're different, what our business model is, and where we are today, and effectively how we make money. So, I've spent the lion's share of my career in payments or in financial services, and having spent time at American Express, Canadian Bank, a bank out in California in Orange County, and those were fundamentally different. But most notably, I spent almost 10 years at MasterCard, and when I was at MasterCard, I was part of an original team to take prepaid, this was several years ago, but take prepaid product, which back in the day was just gift cards, right, vouchers and gift cards, and really look at how do we build an infrastructure to make it a financial instrument. So I realized that you had to have that infrastructure in place to then effectively what banks do is build their customer base. So towards the end of last year, I was approached by a couple of entrepreneurs and investors, and we were all sort of circling around this notion of some of the similarities between the payments industry and what was happening with blockchain and cryptocurrency. And so one of the things, as I mentioned, was this notion of when you take prepaid gift cards and you move them into financial instruments, you need to do a robust AML and KYC. I'm assuming everyone knows what KYC and AML is. Let me know, we can talk about it afterwards if you don't. But you need to really verify that individual. You need to know who they are, who they say they are. And in the same way, what had been happening in the cryptocurrency space is folks would not really have a standard in terms of how they apply AML and KYC. And it's a repetitive process. You have to, if anyone has participated in an ICO, gone on to sign up for an exchange, otherwise have to do some sort of online identity to prove they are who they say they are, it's a pain in the ass. I mean, it's just the way it is, and there's really no standard approach. You can just go to. So, in coming on board and leading Cabin, we realized that there were a lot of market challenges, right? The challenges of how do you effectively do KYC and AML? How do you have a robust program in place? How do you make sure that you have it standardized? And can you do something so that you don't have to constantly repeat it? How do you get away from the aggravation and the frustration? So I want to talk just about, we'll talk about how we're addressing liquidity as well, but primarily let's talk about some of the challenges. So if you think about all of those challenges, what do we know about the market? Next slide. If you think about the addressable market, just in the top 8 markets where the largest cryptocurrency markets, if you take a look at what the addressable market is, about 291 million folks who have either in the last 6 months purchased cryptocurrency or have said in surveys that they intend to do so in the next 6 months. So if you think about all those people, and you think about they have to be KYC and AML, and they're gonna effectively keep doing it over and over again, how can you come up with, and the way we looked at the paradigms, how do you come up with a global entry or a TSA free for the industry, rather than, I mean, if you think about it, would you rather, whenever you go abroad, wait on the customs line every time, or would you rather have global entry? You'd rather have global entry. So that's how we address this. So I think probably anyone who's been in the cryptocurrency space probably is going to say, as I'm up here, I know someone who's doing something in identity. I know someone who's doing KYC AML, and what's the difference? How do you distinguish yourself? And I think, the reality is that a lot of the players out there are looking at how they optimize the upfront. How do they do things better in terms of the upfront KYC AML? How do they build a better mousetrap effectively? And there's nothing wrong with that, but the reality is if you take a look at what's needed in the industry, it's really shifting the paradigm, and I'll get to that. But go back to, sorry, you're too quick. But in terms of our solution, I have a lot more information behind this, but just to give you a sense, in terms of what Cabin is. Cabin is a bank-grade, robust KYC and AML platform. We start with our platform takes in the ID, a government ID. We have a database of over 1,600 ID documents from 180 countries. And so what we first do is we validate the ID, right? So you need to know that the ID itself is not a fake. The second thing that we do is we have effectively, we have the individual do a liveness selfie, right? So for us, it's almost, think of it as a full motion video that gets spliced up. We compare the individual in that picture to the individual in the ID. And the reason why we do the splicing is to make sure that someone's not trying to game the system to take a picture of the picture. Then what we do is we go through a full AML screen, which is global watch list, politically exposed list, and then what we do is we effectively go and we do proof of address, right? Because a lot of IDs, especially drivers, well, first of all, passports don't have proof of residence. Driver's licenses typically, I've had a license that my address is not accurate for a long time. So you have to, in order to do a robust bank grade KYC AML, you have to actually do the proof of address. So we do that as well. We arrive at an individual who's effectively been pre-cleared, right? So if you think about it that way, we arrive at an individual who's been pre-cleared. We also, in terms of our pricing, we charge 40 cents per screen, which is the lowest in the industry, we believe. It ranges between 85 cents to $3. The reason why we do, and by the way, if we did all of that, we'd be a great KYC AML provider. We'd probably be an also ran, and at some point, the industry would get commoditized. So the reason why we charge just 40 cents to do so is because our value, our interest is not on the upfront, but it's on the back end. And I'll explain that a little bit more. If you turn it, thank you. Because the reality is that all of the folks out there in the industry who are doing KYC AML, they're saying, okay, you know what, I'm going to keep on, it's a transaction, I'm going to keep on screening folks time and time again. For us, we want to be one and done. We want to be able to take that individual, and once they've been pre-cleared, this is where we effectively then tie into blockchain, right? We're a service provider. We're effectively a whitelist as a service provider, and let me explain that. So once we take the individual through the full screening, they then get two things happen. They get added to, we have a patent pending, a registry, a blockchain registry, which is a binary marker that sits on chain. It's really pass, fail, yes, no, has that individual passed. The sources of truth remain off chain with our provider who's under PCI and Privacy Shield. And the reason why we do this is there's a couple of things. Many of you may be familiar with the regulations in Europe, the GDPR regulations or Privacy Shield, where you have to separate functionality from personally identifiable information. Our platform does just that, right? So the only information that's sitting on chain is a marker that's associated back to that, whether that individual is past KYC and AML. So what we effectively are also doing is we then, not only do we identify the individual, but we also do a check on their crypto wallet. We bind the wallet to their identity. And then what we also do is we take that individual and put them on a global whitelist. And I'll tell you in 1 second, this is, if you remember any slide, this is the slide you have to remember. So we build up a global whitelist. We have effectively, as we scale, and we have demand right now for about 200 to 225,000 individuals to be screened. We probably will not be able to screen them all by the end of the year, but that's sort of where the demand is. By the end of 2019, we'll have about 1.9 million folks on that list. So the list itself becomes important, and I'll tell you why in terms of sort of our value proposition. If you take a look at the slide going from the top left quadrant and going clockwise, as I had said, we're looking at this as a one and done. Once you've actually gone through the process with us, We don't want you to have to go through the process again. So it becomes transportable as long as each successive ICO, exchange, third party works with us, works with our platform. We have already pre-cleared them, right? So if you think about reducing friction for ICO for exchange participation here under the prospective contributor, when we start looking at our clients, which are the ICOs, STOs, and exchanges, what we're doing is we're effectively reducing the friction for them as well. Because what we're doing is we're saying you don't have to hold on to the data, you don't have to manage that data. You're also making it easier for the consumers who are interested, because if folks in the audience have participated in ICO, if you've done it multiple times, you're sending your copies of your passport or different credentials, and you don't know where they're sitting, right? So if you think about what we're doing in terms of working with our clients, we realize that the time frame for ICOs is shorter than where we're looking at, right? So if you think of a typical ICO, 12 to 16 weeks, right? They don't have time for API integration. They don't have time to sort of build us into the project. So we make it very easy for them to work with us. We have a landing page. We provide them with a landing page and a managed list service. Folks who are, and we effectively manage their own whitelist. Folks who have already come through the Cabin platform are approved. Folks who are not are pending. And then they'll have to go through the Cabin platform to go through the approval process. And I know, how much time do I have?
As much as you want.
Okay, I won't need that much time. So if we start looking at where our value proposition is, as I had said before, we're looking at the back end. We're looking at the whitelist, the global whitelist that we're building. And the reason why is we can say, yes, it's great that we are providing cost-effective KYC and AML for our clients. But for each subsequent client, for each ICO, STO exchange that comes to us, they can say, okay, we can do cost-effective KYC AML through you at a great rate. But what we can also do is we can tap into your global whitelist. So if you think about a third party who comes to us and says, well, I can either spend 100, 200, 300,000 to market to try and find prospective participants, or I can go to Cabin, right? I can go to the Cabin and I can access their whitelist, where I know that these individuals have actually not only shown an interest in the past in the space, but they're already pre-cleared, right? So they'd be good to go. So in terms of the value proposition for us, the value proposition is building our whitelist, our global whitelist, scaling it, being able to provide that to our clients. And lastly, in terms of the value proposition for the consumer customers, they're effectively ready to go. They're cleared, and then what we do is we work with our ICO clients to provide benefits, loyalty, anything to get them engaged early. The one other thing I should mention is in terms of how we then start monetizing this list even greater is our Chief Revenue Officer is a 25-year loyalty and engagement specialist. It's great for us within the industry to have this huge list of, by the end of next year, almost 2 million folks. It's greater if we can then start saying, how do we provide an incentive? How do we get those individuals to provide aggregated data? So you can not only say, I have 2 million folks who are interested and pre-cleared and ready to go, but I can start segmenting in terms of some of the aggregated attributes. I won't spend too much time on this, but I'd spoken about our blockchain marker, and I think the important thing to mention here is that the underpinning, the architecture of our blockchain marker is really where we start looking at. Today it's KYC and AML. The marker is a binary marker, pass-fail, right? If you start looking at all of the other applicability, not just for creating efficiencies, but sort of amplifying things. So you start looking at our registries for other attestations, for educational attestations, for age verification, for healthcare, and you keep going on and on. In terms of the payments industry, all about e-commerce and card not present transactions. How do you address that using this binary marker? The benefit is you're effectively being able to provide information without exposing a lot of the information. I think one of the easiest examples for people to get their head around is like today, if you go to an establishment, a bar, and they ask for your ID, you're showing them your picture, you're showing them your name, your address, all of those pieces. You're showing them your age as well. But if there is a way to utilize a registry, right, if we leave back, and again, it's too technical, but leave it open on the back end, there's a way for you to integrate into a registry, then it's just literally all they need to know is pass, fail, yes, no. Are you 21 or over? Yes, no. You don't have to show all this other information. So the reason why I say that is just today we're addressing the friction, we're addressing a need within the market, but as we start to look at other applicability, we'll start using this as a springboard for other opportunities. In terms of our industry advisors, we have seasoned executives in payments, identity, blockchain, security, and compliance. And so they have really helped form the basis for how we go forward. I will say as well that what was very interesting is we have a large and growing referral network of folks who we've met and we've introduced to say, are you interested in the platform? And they've said, we're not only interested in the platform, we're interested in recommending you to more and more individuals. We're just in the next 2 weeks opening up our doors, and we have clients where we've signed them up to our service agreement. So it's one of these things that's really scaling quickly, and we've got a lot of demand before we even open up the doors. In fact, we're getting between 5 to 7 referrals from our referral partners per week. This is my email. I just want to say lastly, in terms of where we are, as I mentioned, we've been doing private beta testing for quite some time. We've done manual white glove testing of our process to ensure that even in situations where we don't have the automated platform up, the whole process works. In January 2018, we were seeded with accredited investor funds to get us started. We are right now in the middle of what I would call a hybrid Series A, and we're doing our own token. And the reason why most of the proceeds that we're raising, most of those proceeds go towards buying down the upfront cost of KYC AML, because as I said, the value for us is building this huge asset, and that huge asset is a global whitelist. So I'll leave it at that. I think that was probably enough, but I'd be happy.
So as we move down, now that we've gotten out of the compliance world a little bit, we want to start to talk about gaming. And what does gaming have to do with blockchain? Well, there's a lot of, I would say, connectivity across the mobile app world where blockchain can not only drive engagements, but at the same time kind of drive commerce and transactions through that environment. Next client that we're going to be bringing up today is Priatech and Ex-Vendor. And prior to that, I would like to show their short video. Thank you.
The more I learned about Priatech, the more excited I got. It's something that is not just experiential, but that causes a crowd to be drawn around it, because everybody starts to see you playing the games and then wants to play themselves.
It really drives right into the pulse of the culture of this industry right now. What is cooler than playing little micro games throughout the day? Not only driving that engagement, but really creating fun and a little bit of escape. When I can save money at the same time, I felt this was a natural fit for people to interface with that.
Eventually, these kiosks can become even bigger. Everyone will be talking about the Intuit kiosks and people going up to them, people traveling even a few miles to the closest one.
Once I started learning about it, I was like, wow, because it was gaming and rewards. There's going to be utility apparently in Createch, okay, from people playing the games, interacting, earning coins.
When I see all the participants that are involved in this project and that really have rallied around the excitement of Createch, I know that we are going to be very, very successful in being able to drive that because we all have a stake in this.
At the end of the day, like, we love to play games. There's a whole scientific reasoning behind it, but we like to play games and we like to be economically incentivized to play this game. So Createch has figured out a way to combine all these different factors into a very healthy ecosystem that pretty much operates on its own. It does what we set out to do almost a decade ago.
I am fully on board with how big I think this is going to be.
So I guess I was one of the ones that were responsible for bringing Createch into the blockchain world because as I introduced Milind Bakabar, the CEO.
I just created a Wix website for my...
Essentially, Milind didn't know too much about blockchain 8 months ago. And as well, we're all learning, and I think this is part of discovery as well. How to be able to kind of take a new technology and be able to kind of drive a blockchain on it. And we've made a lot of progress. We're taking the company to market right now. As you can see, the Createch kiosk here is a highly engaging product that's deployed right now in a pilot across 10 malls, I think, in the New York City area here. And when you get to see the numbers, you'll get to understand why we love this company so much. So with that being said, Milind Bakabar.
Appreciate the kind introduction. Brian's been a very trusted advisor to us. So a lot of people ask me how I came up with this idea. And in 1998, I started a coin-op game company out of a garage in San Jose, California. I initially made a virtual reality machine that became the most successful virtual reality machine in the coin-op industry. Sold 6,000 units worldwide at an average price of $9,000. So did over $54 million with the initial product. And then it led to a relationship with Electronic Arts. I know many of you have heard of Electronic Arts. Worked on Tiger Woods PGA Tour. I licensed it, put it into a game box. We did over $50 million with that. And that led to working with John Madden football, racing games like NASCAR and so on. And the golf game, the Tiger Woods golf game, we put it online. And we actually gave out $1 million a year for 3 years. This is back in 2001. So I was one of the very early esports guys. I gave out $3 million bucks, and it was amazing to see what happened. We actually registered over 500,000 people. Back then, registration required your social security number. We'd never do that today, right? But the machines actually earned over $100 million. It was $4 to play, and you got to win cash. So I learned a lot about skill-based games, laws in all different states, and I wanted to take, and I realized that giving out this money and using esports was actually creating a social network that I could mobilize to retail locations. Whenever I changed the promotion on the game or changed the win conditions in the golf game, all 500,000 people would rush out there and I could actually measure their behavior. And retailers loved the fact that I was driving people to their locations. So that sparked the idea for Createch. The whole concept of creating a new category of prize machines that you can put in retail locations to drive more traffic to it. But what's unique about this prize machine is it's free for you to play, and instead of giving out $3 million, our goal is to give out $100 million. And imagine signing up millions of people with that. So that was the goal. So Createch is the name of the company. It's an acronym for Prize Advertising Technology, and our social network that we're creating is called In to Win. It's based off prizes and fun. So you are familiar with traditional digital signage, right? This digital signage in airports and malls, $29 billion industry, very expensive. That on average in a mall costs $10,000 to $15,000 a month, and you can't measure it, right? It's a static ad. Anything that you can't measure in today's world is susceptible to being disrupted, right? So we came out with prize-based digital promotions, and we patented this concept. And what we do is we have a very unique proposition. We go up to advertisers, and if they're willing to give us a free ad, a free prize, their product is a prize, we give them a free display ad. So in this case, like say, imagine Best Buy giving out a TV. and in exchange we give them that ad that would ordinarily cost $10,000 per mall, but in a network of malls. Imagine 30, 50 malls, right? Be a great value proposition to Best Buy. So we don't charge for the display ad, we only charge when somebody comes up and engages to win that prize, proving that they must have been interested. So we call it a price per engagement, kind of like a price per click, but our engagement, if you go to the next page, is much more comprehensive than a click. It's when somebody voluntarily comes up to the machine, touches the machine, and then sees an array of prizes. On average, 100 prizes per machine, and they pick Nike sneakers, let's say, for instance, right? That's matchmaking. That means that's the most important or most valuable type of engagement, a voluntary engagement. So somebody comes up to it, touches it, picks Nike. The second thing they have to do is register. If you don't register, we don't call it an engagement, right? They have to jump over a wall to get to that brand. Then after that, we ask them a survey question. What kind of sneakers would you like to wear? You push running sneakers, we profile these twice. Then we throw in a game. Why game? Because today, when brands want to engage with consumers, it's all about fun. It's about an emotional connection. Experiential marketing now is a multi-billion-dollar industry. And that game makes it the most scalable type of experiential marketing in the industry. We've been told by experts that this is the best product in the market when it comes to that. We have the rights to Wheel of Fortune, Jeopardy, Family Feud, Price is Right, and so on. After you finish playing the game, you're going to either win the prize that you chose, a discount off that prize, and the token, right? So you're actually winning tokens, and what the sensation is, it's like a free slot machine. So you're hitting ding, 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 ding into the corner, you've seen the machine here, and now you're also sitting with an offer in a retail location that you voluntarily engage with, and the store is 30 feet away. Our redemption rates are through the roof. So we actually provide real-time data analytics for all our advertisers, right? How many engagements, how many coupons were issued, which coupons were issued, which ones were redeemed, new and return customers. We can even measure loyalty, right? Because we're so fun, people just don't play it once, they keep playing it over and over again. And that gives people, that's the ability to measure loyalty, right? How much people want to re-engage with it. Survey questions and so on. The next one. So our results were astonishing. We literally, like Auntie Anne's, had a 51% coupon redemption. You never hear of that when it comes to coupon offers, right? Typically it's like less than 1%. Taco Bell had 60 redemptions in one day. Clearwater Aquarium was 14 miles away from our closest kiosk. We had a 13% coupon redemption. It was incredible, right? We actually subscribed to 135,000 people, right, that had almost 1 million engagements in just 6 months. That blew away the results of our kiosk. What we want to do now is we want to actually deploy 2,000 kiosks out there, right, in the top 10 markets, in grocery stores, malls, airports, and so on. We are currently, it's actually 5 malls right now, but we'll be to 30 malls within the next 3 months. Here's the beauty of it. As people are playing the kiosk, you're earning tokens. The tokens are redeemable for gift cards and playing tournaments on our mobile app. People are downloading the mobile app, and they were on average playing 38 times a month at an average engagement cost of 65 cents. We were earning $25 per mobile user per month. It's unheard of results. The kiosk brought us that opportunity because advertisers are willing to pay 65 cents, $1 per engagement, right? So this kiosk parlays into mobile transaction and revenue, which is very valuable. If we succeed at getting 2,000 kiosks, or when we succeed at getting 2,000 kiosks out there, we will have 8 million people per month or per year registered on the kiosk, issuing out 54 million coupons, which I'm going to hand it over to Jeremy.
So you heard earlier about 8 months ago, we hooked up with Brian and select few advisors, and we started exploring blockchain within Createch. Initially, it was an in-house project, and as we started to explore the space of blockchain, initially the simple thought process was, hey, we'll take our virtual currency and make it a cryptocurrency. And little did we know that as we investigated that, there was this much bigger opportunity in the market that we hadn't even considered. And that's the area of coupons and discounts and taking those assets or those items and putting them on the blockchain. And as you'll see through this presentation, that project from inside Createch has now evolved into its own organization called Indexor, and we're spinning that off. Next slide. So coupons are a huge business throughout the United States. Many people aren't aware of this. $570 billion total value in the coupon market in 2017. Out of that, virtually most of these coupons, all of these coupons, 93%, are actually paper coupons. They're still out there, and many of you may receive those at home. And so the biggest problem in this industry, there's a huge fake supply problem, right? And so how do we solve that with Indexor? So Indexor enables an improved ecosystem. What we do is we take a regular coupon, whether it's a paper coupon, a reward point, etc., and we put it on the blockchain. And by doing that, there's a few things that we can do. We can reduce the costs associated with the life cycle of that coupon. So for example, most coupons get collected from a grocer, for example. They get put in these huge plastic bags and sent to a clearinghouse. Now it's manually sorted through. The ones that are fake go on one bin. The ones that are legit then get collected, and then they get sent over to the original issuer to claim the payment for the coupon. So we solve all that problem and all of that logistics with our platform. Next slide. So from the Createch perspective, it's a great marriage between these two projects and these two entities. Why? Because Createch becomes our first initial go-to-market partner for the Indexor platform, right? It's a consumer-facing mass adoption strategy for a blockchain technology that serves the Createch business model very well, but it stands on its own. So as you'll see, the long-term path for this project is to not only have Createch be our user, but bring in other entities, other organizations that want to digitize and leverage Indexor to distribute their coupons. Next slide. So again, just a little bit more about the two projects. So many of you interacted with kiosks. Mylène talked about our social engagement technology and network called In2Win. Consumers, it provides the consumer-facing rewards platform. User acquisition vehicle is huge. And so that creates a significant strategic position for Createch in the market. Why is that? So let's say that we do achieve these 8 million users registered on the platform annually, right? Every single one of those users will actually have a multi-currency crypto wallet on their mobile device. Initially, many of them won't know about it, won't even know how to use it. But over time, we're going to educate the users, and that's going to provide us a platform from which we can launch other products related to crypto. So perhaps we use it to monetize it from a consumer lending perspective and other products that are tied to the cryptocurrencies as it evolves into the future. Next slide. So I'm going to focus on just the top 3 things that the technology brings. It makes every single coupon, reward point, loyalty point, etc. traceable. And that's significant because, as you saw on the platform, we can be very effective at getting that coupon into the person's pocket or their mobile device. But what happens to that coupon afterwards, right? Where does it go? How long does the coupon reside in the possession of that user? We're able to do that. Number 2, fraud resistant. Every single coupon is actually going to end up on the blockchain immutable. So no longer are the days where you can just Xerox a coupon, walk into the store, and claim it. And then we're going to make it exchangeable. Now this is super, super exciting. And it's actually not what originally motivated our project, but now is really creating a lot of excitement for me and many people on our project. And it's the idea that once you have a coupon, maybe you have a coupon that's not relevant to you. So a lot of us get those coupons and envelopes in the mail. And most of those end up in the bin. However, with our technology, you'll be able to take those coupons, right? Perhaps you've received it on your mobile device, and you swipe right if you want to keep it, and you swipe left if you want to trade it, right? And so now you're able to trade that with someone else that may have a coupon that you're really interested in. So Mylène talked about redemption rates going through the roof. In this model, they're going to go even further because now that coupon will work its way through the trade system to someone that actually cares about it. And if it doesn't, then there's no market for it, and we know that because we've traced it. So now we can use that information to improve the coupons that are distributed to people so that they end up in the hands of users that care about it. Next slide. So you saw the video earlier. You know, it's not us necessarily just being excited about this project. There's a lot of our advisors here that have joined the project. don't go yet. A lot of advisors that have joined the project, and they're the ones that are really educating us. They're saying, you guys don't know what you have here. This thing is huge, right? This is a way that we can actually bring blockchain and crypto to the average consumer, right? So we're buying into that idea, and we're very excited to share this project with all of you today. Next. So value. The main thing that I take away from this slide is the woman here standing in front of the kiosk. And so imagine this person, she's in the mall, she's walked up to one of these machines, and now she finds a promotion she's super excited about. Maybe she's excited about shoes. She selects that promotion from the kiosk, selects the shoes, she gets 20% discount, right? And Melinda talked a little about this. And at the same time, she's got crypto. And if she's done this enough, whether it's on the kiosk or on mobile, now she has both a cryptocurrency in her wallet and our app, as well as a discount. She walks 15 feet to the shoe store, gets her discount, and pays for the crypto. Unheard of. And we can bring that to the market. Next. So I'll skip this one. Let's go to the last one. So I'll hand it off to Melinda.
So, thank you. So Videxor LLC, as the good attorney that was up here a little while ago was saying, you should always structure equity involved in this. So we have an offering that we'd love to talk to anybody that's interested that includes equity, a security token, as well as potentially some utility tokens. So we're really excited about this, guys. We're, like Jeremy said, we're all about adoption. This is something that's actually in malls right now. We are looking forward to a national launch, so we believe we can get a lot of crypto in people's hands out there. So thank you, everyone.
So as we're in the conversation now about tokens, where does it all go? How do we create stored value, and at the same time, how do we create stability in the underlying currency based on assets? The next company that we're going to show you is a company called Kinesis. And I'm very, very happy to report that the company now has surpassed $60 million, both in their pre-sale as well as on the beginning of their public sale. And what Kinesis has done is it's created a gold-backed asset that is works in conjunction with one of the largest and global gold bullion exchanges in the world. And what we're seeing now is a lot more institutional interest in in the coin's ability, as well as in Kinesis's ability to be able to kind of not only create stored value there, but drive a dividend. So this is the Kinesis story.
Kinesis currencies through our app or e-wallet. You instantly purchase real gold or silver, secured in one of our 7 partner vaults situated all around the world. These vaults store your precious metals for you, completely free of charge. Your precious metal is then digitalized using blockchain technology, allowing you to send it to other Kinesis wallets, trade it on the Kinesis blockchain exchange, or spend it easily and freely using our Kinesis debit card. Each transaction, whether in or out of your account, simply adds or detracts from the amount of gold or silver in your account, which is easily displayed and accessed through your wallet. These transactions are done in nanoseconds, and the Kinesis currency you own can be transferred back into real gold or silver any time you want. We'll even deliver it to you. The Kinesis wallet and debit card runs off the Stellar blockchain, a system so powerful, no matter how many transactions are being made across the world, you know your payments will be made quickly, safely, and securely. So who are we? Why should you trust us? We're founded by ABX, the world's leading electronic exchange for physical precious metals, a company entrenched in the industry and with knowledge, expertise, and experience that has been built the best part of a decade. We're at the forefront of making history and redefining how physical bullion is traded and used as a functional currency which also pays you a yield. Currencies are volatile, and with a market that fluctuates up and down so often, why not use Kinesis currencies based on some of the safest commodities on Earth? Gold and silver. Sound like a good opportunity to you? Check out the KBT token sale now and be part of the revolution. Kinesis, the future of currency.
We put something very, very unique together for this company. One of our strongest relationships is in the top 5 exchanges in Southeast Asia. And 6 months ago, as we started to address how to be able to, I would say, drive more relevance into their exchange, it wasn't about listing every single ICO and every token in the marketplace. So we tried to focus on the base currencies and building a killer product. What has happened now is we started to take coins like Kinesis and what we did with Ripple 2 months ago, and that was build base currencies, which gives investors, certainly on the trading side, really a wide array of options in terms of being able to build trading strategies across underlying assets that have stored value to them. So this is our partner MBAX. Daily trade volume now is pushing $300 million, which is, again, a very, very strong indication right now on how this market is growing. We set up an incubator with them that launched in Hong Kong in September, and we are running right now the first couple companies through their class. Essentially, we're building a pre-ICO marketplace for early stage companies. And if anybody has any questions on them, I'll be more than happy to answer them afterwards. Go to your left for a second, please. So now I want to take a little bit of airtime and talk about us. Not that I've said enough or I said too much. So 14 months ago when we started, we had a very, very clear vision, as I said, right? How to be able to kind of drive the narrative of commercial adoption and at the same time be at the forefront of innovation in the space. Next slide. So we started this advisory business. We started working with some companies and trying to figure out not only their strategy to market, but how to be able to provide compliance oversight, even though there really wasn't any compliance to discuss of net last year, and most of the companies that were involved in the space, as Joe mentioned earlier, were pretty much doing whatever they wanted to do. And we saw this as an opportunity to be able to establish sustainability both in our business model as well as in the underlying companies that we were working with. This became very much an understanding of the culture of what's driving blockchain right now. Where did we come from and why is it important right now to the future, not only of capital markets, but in the way assets are transferred, stored, and grow. So we started to build out capabilities across a number of fronts. As a developer, working for many years across a number of disciplines, we started to apply our ability to project manage on the development side and started to partner with some of the really the best qualified engineers that we could find and started to drive agenda across our client companies. So now as the company started to expand a little bit, 6 months ago we started a little venture lab here in this office where we're working really much in a very decentralized way with clients all over the world. To date, we've been involved in 16 projects, and we continue to see great value across the companies that we can help drive both awareness as well as sustainability. You can pass this one. So this is very important for me tonight. I'm unveiling a product that we started working on in September. The origins of this came, by the way, is there any engineers in the room today?
Yes, I love it. SNR?
Are there any sound engineers in the room today? Because this is very, very important. So this, of course, is a signal to noise ratio, Jeremy. And I wanted to put it out there because we saw something very, very scary about the marketing of ICOs last year. We couldn't separate signal from noise. We couldn't really identify what was marketing, let alone what was really technology. If you wanted to get into a white paper, and we consumed thousands of them at this point, if I didn't fall asleep by page 6, it was usually page 7 or page 8, depending on which company we were looking at. So what does this mean to us? Well, we looked at it as an opportunity to be able to put math and science on display and also drive a high level of engagement across vertical intelligence. So September 11th of last year, we started our first repository in GitHub, put a small development team together of 2 people and myself, and we started to address this problem. And we started to, if you can go to the next slide, please. We started to build an intelligence platform that had vertical focus on the blockchain space. We wanted to give it away for free, essentially create an open door policy, and at the same time provide AML and KYC to users so that we would keep bad actors out of our community. What we saw in the advertising world of ICOs is that most websites that were advertising or promoting ICOs were infested with a lot of malicious activity. It was bots, it was security precautions. It's not really the bots that are doing anything, they're just kind of sitting around waiting for somebody to come in so that they can follow you. And when you go to your wallet, if there was a vulnerability there, your money disappears. So in order to be able to kind of create a better environment for these companies, we started a security apparatus. And that security apparatus was doing audits mostly in the security of ICO environments. And it even became worse there, right? Because as you had 2 or 3 developers or designers building a website, most of the vulnerabilities lied inside the middleware of these companies. And we knew that if we wanted to build a world-class product and kind of drive an engagement across the space, we would have to take the highest levels of security to be able to provide users not only with a safe environment for discovery, but also as an opportunity for us to be able to kind of drive that engagement through our business model. So we started coding. We built an experimentation system that was working with multiple data sets and taking that data and trying to organize that in a way where users would find value from the data that not only we were providing them, but what they were providing us. So although we're thinking about a token, we're not really focused on that. We are a startup company. We are looking for a seed investor right now to be able to take this to market. And as we started to build out these blocks of intelligence around the blockchain world, we found out that this framework that we've built is not only scalable, it's not only securable, but at the same time, it was transferable. And as vertical intelligence becomes more important around different market sectors, we feel we have a really, really good opportunity to be a new kind of data company. So as we move forward, Rob, we'll talk about that. We go to the Plato interface. So this is the first time on public display, by the way. Go to clusters, please. So what we've done here in our interface, we're UX guys at the end of the day, and we realize that if we are going to build sustainability with our user base, and at the same time drive value, we needed to create a utility relationship with users. Now in the blockchain world, we all consume news, but in most cases, the news finds us, we don't have to find it. Anywhere we look, we can see a number of things going on in the blockchain space. So basically here, we built a very, very simple process of going in and scraping data, but organizing that data where we can take the entire blockchain world and drive real-time intelligence and real-time news of what is happening in the space. Further, all the information that we are bringing into Plato is being indexed. And our indexing engine now has created a very, very robust search solution that we know is focused purely on the blockchain world. So why should I have to go to Google and sometimes sort through A, advertising, B, pay to play? We wanted to democratize this process, so we started to build it. And we went one step further after we had that interface done and the experimentation process done. If we can go to assets, please. Thank you. CoinList is fine. So we started to take in some real-time price data. And at the same time, if you move down the screen a little bit, no, the big panel, thanks. We started to, for this basic version, or our first version right now, we're taking in some mining statistics, lower. But at the same time, lower. We're taking in social statistics right now on over 1,100 coins. Why is this important? Because there's a direct correlation what happens with these companies and how they are being not only perceived and being the information of that is being consumed in the marketplace. Go to tokens, please. Part of this process was also working with open source data. We're a startup company, and frankly, to tell you the truth, we want to try to figure out how to be able to use existing information that's out there right now and drive high value to the users. So if you go down, Rob, for a second. And I want to play this video for a second, apropos, because I'm on Plato all the time, right? It's a utility for me. It's always open. So I came across this company yesterday, And I think it was just an amazing awakening for me too on how innovative this marketplace is right now in building new financial models and also new capitalization models. So Rob, if you could just play this video, not that one, let's go back, reload the page. Go down to Holo. Holo. Down. Holo. Down. There you go.
Our ICO is not an initial coin offering like most ICOs. It's an initial community offering. There's two main reasons for that. One is that our currency design is not about coins. It's not coin-centric or token-centric. It's agent-centric. Even though for the ICO we are offering temporary tokens, ERC20 tokens, that functions as a receipt for the fuel that they bought. That receipt will then be redeemed for Holo Fuel after Holo launches. And when they redeem that receipt, their account gets credited and the Holo account gets debited because it's not coins created from nothing. It's actually a double entry accounting system. So Holo will end up in debt the amount of money we raised, which makes sense, right? Like it actually holds us to account for the money that we raised. But it also, congruent with our whole approach for the ethical ICO, is it's not about the coins, it's actually about the community.
I think the base level difference that matters is the fact that we're not designing this so that we can get rich off of it. We are designing a system that we believe will thrive. And so how do we make it win-win-win across the board for people to participate so that this is an enlivening, engaging space and community? And so thinking through who are all the players in the space and what are their needs and how can we be of service to them is at the root of the design.
A lot of people think because people will come and buy your coin that now you've found your user base. But if your offering is sold out in 30 seconds, you didn't get much of a user base. And just because somebody will buy a gambling chip, especially if they have, crypto billions and they need to diversify, it doesn't mean they care about your product at all. It doesn't mean you found your user base just because you got some money. So we really wanted to figure out how can we make sure that we're reaching the people that are going to run this network.
The point that I'm making here, especially with Plato, I would have never really have known that company. It found me yesterday morning and I was pretty enthralled with the way that they were approaching this marketplace. And I think this part of discovery right now is really what this industry is all about. These guys have come up with a tremendous model, we think, that scales with deliverables and transparency. And 6 months ago, we started working on a reporting solution for token companies because we feel and we recommend all our companies that even they are a token, and even though the SEC may only come after them after the fact, they have a responsibility to token holders to be fully transparent. And that goes right down to the accounting level and the way that distributions are led through the token. So we're strong advocates of that reporting. But getting back down to Plato for a second bit, because we want to have a little fun here. Go down to the people search. What we did find across Plato as we extracted all this information, and as you can see here, this is running real time, it's live, it's not smoke and mirrors. We brought in 2,097,000 nodes of information, have indexed them, and in that process we have extracted information on people. And we've built an intelligence director around that. And this is really exciting for us because it allows people to connect with each other, and at the same time, on a permission basis, they can actually do business together. I've been on LinkedIn since 2005, right? And it's a great resource for me at the end of the day. I've had relationships now that go back close to 15 years where I've never seen the person face to face, yet I've done business with them, and that's pretty cool. So I think as we started to think about the different data sets that we could mediate and run through Plato, we thought patents was actually a natural fit here. So we took the entire world of patents around the blockchain space, and we went out and we did the same exact thing that we did with the ICOs. We started indexing that information and having it searchable. So we could just pick one, Prof, doesn't really matter. It's not porno coin, right? Okay, good. So As you can see here, we've taken all this information. We can go to claims for a second. And we are extracting that information from a data provider for us. And even though we're paying for that data, our model is to be able to give this information away for free. Drive the engagement, have a whitelisted community, so that through our banking apparatus, which we are now highly considering for next year. I'm a licensed investment banker. I have my 763 and 79, and I've been kind of at the forefront of crowdfunding for 6 years now, and I've watched this evolution turn into the token environment. We feel that we have an enterprise-grade solution that can engage a wide array of people into the industry, everybody from analysts over to the regulators. And go to the patent PDF. We are actually pulling the physical patents down. And I think this is really important right now. Most SaaS models that are out there driving this kind of intelligence are $6,000 to $7,000, $8,000, $10,000 a year for people to access. They may not be using it all the time. And back to your point earlier, we want to be able to drive value across the sustainability of our business as well as the marketplace. So we decided we want to give this away for free. But our business models tells us that we need to go out and make money, and we need to be able to do that on a very, very consistent level if we want to survive. This marketplace is moving too fast right now, and data is the one thing that can't be disseminated between truth and lies. We know when things sit on the blockchain, there's supposed to be truth there. But there's a lot of opaqueness in the market. And if any of you have experienced anything in the OTC world, you'll know what I'm talking about, right? People are claiming they own wallets that they don't own. People are claiming that they have money that they don't have. And at the same time, they're negotiating between multiple intermediaries, really pushing air back and forth and not really getting anything done. So we feel that by building a community and understanding what our community wants, we will be able to deliver high-value product to them and at the same time grow our base. We are doing things like FinCEN database searches for people. So let's just go back to Zeus for a second, down the bottom. And we are building this into an open analytic interface that is taking the consolidation of our user consumption data and pushing that across places like Bloomberg. And I think this is really important here, right? It's not, even though Plato knows and Plato understands, it doesn't mean that the rest of the world is going to understand. So we have to make things simple and easy to understand so that people can take that community information and layer on their own analysis of what's going on in the market. So as we take this out right now, we are moving over into a full mobile app that will be released on both the iOS and Play Store in January. This was a bootstrapped application. There's only 3 developers that had hands on it. And as I was thinking about the user interface, we've been getting high marks right now in terms of both simplicity as well as interface. Our business model pushes us to take other market verticals that are, we think are very, very compatible to what Plato has to do, especially the cannabis sector. So as investors, right, it's not just about investing in public companies right now. It's about drug discovery, and it's about the genome of what's going on there and being able to deliver a high-value engagement with people, where in turn we can convert that into a very, very high financial transaction based on our understanding of how to drive banking syndication through that. So we are raising for this right now if anybody has any questions. With that being said, we're going to move on to our last speaker tonight, who's had a tremendous amount of success already in the ICO market and building, we think, a new standard in terms of retail compliance and the ability to kind of normalize crypto. So Maurice Harari from Fluscoin. Thank you.
Just pull up the website this time.
Yeah, it's Fluscoin.io.
C-O-I-N. There you go. Right. Perfect. And just scroll up and down on the site. All right, so let me introduce you guys to Fluscoin, tell you a little bit what we're about, and get get you to know what's happening with our project. Fluscoin was started out of a Latin American big retail office where they operate and manage multinational and global brands coming into Latin American cities. We started Fluscoin as an approach to bringing blockchain technologies and loyalty engagement into the space. The space was built around a rewards program that taps into social media and influencer marketing to bring loyal customers to retail. What we've done is we've spun off Fluscoin as its own initiative around stability, retail coins, and helping retailers reinvigorate and connect with their consumers. Our product is an AI-based smart coin that maintains stability by using control of supply and demand. This AI is then overseen by what we call Eunomia. It's a foundation that handles the coin stability and the issuing and buying back coins. We've already partnered with multiple retailers in several different regions. Our core focus has started as Latin America. We've expanded way past that. We're now doing deals in Asia and Europe and starting on the very light level, even engaging into the US. That starts through our rewards program that we then roll in our loyalty, our stablecoin. How does it work? Why are the merchants jumping into it? The merchants are jumping into it because this coin allows them to accept both our own stablecoin, and it acts as a gateway for other digital coins. So the merchants understand it. They know how much money is sitting in cryptocurrency, but that coin cannot be accepted in their stores. So we also have a vertically integrated exchange with a fiat clearing. So we're able to allow the merchants to accept those coins at retail from the consumers and give them a daily settlement in their fiat currency. At the same time, most importantly, is remaining relevant to their consumers. And understanding their customers' transactions, understanding where they're going after the purchases, understanding who their customer is. There's a host of relevance that's coming into the retailers with our coin, and that's why we've seen a big exception. Also doesn't help that we've made strategic partnerships with higher-ups to launch our coin and run their loyalty programs on our platforms. Consumer, why do they like it? Stability, security, and reliability. Our coin is built for retail payments, but also more importantly, it's easy to use and integrates with a bunch of other loyalty programs. And the coin holders, what's going on there for the investors? What happens with the investors is they're able to see staking rewards. So as the coin goes up, as more and more coin gets issued, the investors are participating in the staking rewards and earning a lot more from them. As our market cap continues to rise, that market cap gets shared with part of the ICO investors. So one of the things I want to talk to you about is the team. What's going on with our team? Started by myself and a few of the core partners. Andreas over there started as the VP of advertising from Zalando. Not too many people here in America know who they are, but they happen to be Europe's second largest e-commerce website. He oversees their artificial intelligence and data engineering, as well as the advertising whereby vendors are advertising on their sites. He helped craft our model, where we're helping retailers connect to their consumers, managing an artificial intelligence for targeted promotions with our consumers as they purchase various different segments. Let's jump down to the team please. See hit right here. So we got the executive team. That's my partner Stefan, who has extensive experience in the Latin American region, doing business, managing some of Rocket Internet's large e-commerce deployments in the Latin American space. So that helped us really open up a lot of doors with all the retailers to accept the coins. Let's go down to some of our development team. I want to give a few key highlights. One is our chairman, Steve Norris, who sits as the chairman of the Eunomia Foundation, managing the coin stability. He helped form the Carlyle Group and really knows how to take our asset as a back coin and all the all the tangible assets that are going to be sitting in our back coin and deploy those into a profitable investment and manage liquidity as well as stability. Going on, we have several ambassadors helping open up doors to other governments, other institutions to push our coin acceptance. We have the CEO of France's largest discount marketplace, and a few of the other key players that help open up our retail and open up a lot of relationships. So what are we looking for right now? We're looking for strategic partners to help push our coin forward. Brian has been an amazing help in that. And we're also looking to close out our investment. We've already raised about $30 million in our ICO. And we're going to be listing now on several global exchanges, mostly based in Asia. Trading starts in December, and we would like all of you guys to participate as well. Thank you guys very much. I appreciate it.
Okay. Thank you very much, everybody, first of all, for showing up. Thanks. Great words. If you guys have any questions, any of the companies, I have cards. I'll be more than happy to give it to them now. I'm going to give away a nice Samsung Galaxy Tab. So thank you, everybody, for staying through to the end. Rob, to make it independent. Sure. Time with the Price Waterhouse. Okay. George Wen.
Yeah.
Congratulations, George.
Wow.
You are the winner of the Samsung Tab 4. Thank you very much.